Okay folks, welcome back to the channel. Here we have the 4-hour chart of the US30 or the Dow Jones, and we're going to be going over a price action review and a couple of ICT tips and tricks that people in the private community were asking me, so I thought I'd make a YouTube video about it just to inform people of how I actually look at the markets on a daily basis. So we're going to be focusing a lot on liquidity in this video, as well as some of the basic smart money concepts such as structure, fair value gaps, and general order flow. But just before we get in the video, I just want to say that at LiquidFX, we are offering 30% off all the LiquidFX packages. So this includes free one-to-one sessions, a full simplified course, entry models, daily Q&A sessions, and a lot more that we have coming at LiquidFX. So it's an exciting time. This offer will not be around forever, so grab it today. 30% off using the code Easter Sale. The link for the community will be in the video description. So now let's get back to the video. So here we have the US30 here on the 4-hour time frame, right? So the way that I have marked out my structure is pretty self-explanatory, I think, at this point. So I have made a separate video on how to mark out structure. So I recommend checking that out if you haven't already seen. So the bit which I want to now dissect quickly is the fact that I want to quickly go over where the market could move at the moment. So a general US30 outlook. So what we have over here, what I've labeled here is something which people should understand by now, is we have liquidity over here. So this here represents the trendline liquidity. So it's one of the three major forms of liquidity that we use, right, in the markets in general. So this trend line over here represents a large amount of sell side liquidity, which if we look at current structure over here, so if we zoom into current structure, right, currently the way we have in US30, right, we're at an all-time high territory up here. So this is our all-time high up here, or ATH, all-time high. And so from here, we're in a bit of unknown territory. So what we've had over here is we've had a confirmed shift of structure here in this region. Now, what makes it a confirmed shift of structure? So we had a high over here and a low and a high. Now, since then, we've had two breaks of structure to the downside, right? So what we've seen is we've seen bullish structure to the right of your screen, turn bearish, and then be a confirmed bearish over here, right? So this is very basic SMC concepts, but a lot of people get this mixed up, and I'm not quite sure why. We want to see a break of structure over here, which confirms a violation of structure. And then we want to see price give a confirmed structural break, right? So here we have a structural shift. So this is what we call a market structural shift, or an MSS, market structure shift. And here we have the structure getting broken. So here we have a boss, or a confirmed structural shift, right? So this simple smart money pattern can be applied here on the chart. So we had an all-time high over here. And since then, we've had one break of structure and we've had two breaks of structure, okay? So this is something that I explain to a lot of the private students as well. You want to understand and utilize this simple SMC concept when it comes to your trading, right? The second thing we want to look at is we want to look at which fair value gaps are being created and generally respected. And here we have quite a simple answer. We have bearish fair value gaps over here. So if I mark these out in blue, these are the bearish fair value gaps that are being respected, right? So we see a bearish fair value gap over here that's being respected. And we see a bearish fair value gap over here that's being respected. So we're seeing bearish momentum in the markets, right? So when we see bearish fair value gaps being respected, right, we understand we are moving in a downwards trend or a downwards direction. And now that we have a huge amount of liquidity to target, right, this will be our overall narrative, right? We're going to be looking for a retracement perhaps tomorrow. So this is being recorded on the 11th of April on a Thursday. We could see price retrace into the weekly range before coming lower next week. And the idea of that is that we could eat, or the markets would come and eat up some of this liquidity over here, this sell side liquidity over here, right? So this is part of the bias, right? So this is how I create a general bias on the 4-hour time frame. So if you haven't looked at my videos on how I create a bias on the Forex pairs, it can be applied directly to the indices. So I highly recommend checking out that video, right? Now, the main thing we wanted to talk about from a liquidity perspective was actually on the 15-minute time frame over here, right? So if we bring up the 15-minute time frame over here on US30, okay, just clear up the chart a little bit. We're going to be dissecting price action from this week over here, right? Starting actually from last Friday. So what we had on Friday, we had Friday's price action over here. So if I bring that up for people to see, this here was Friday's price action, okay? So I bring this up from here, so this here was Friday. Now, what does Friday what did Friday actually do from a liquidity standpoint, right? Friday was a very rangy day over here, right? So Friday didn't really achieve anything. This was Friday's price action all over here. So we see price chopping up and down, sweeping the Asian high, sweeping the Asian low, but we don't see any clear structural breaks giving time-based fair value gap. So this is what you need to understand over here, right? Friday lacked two things, right? What did Friday lack? Well, Friday lacked time-based fair value gaps or time fair value gaps, and price also lacked a clear shift in direction, a clear break of structure. We haven't seen it, right? When we see price wicking up and down the way it has done, right? So we see price over here wicking up and down. So we haven't really seen a very clear structural break over here. We've seen wicks, and we've seen this wick not even get broken. So we didn't have any clear direction on Friday. That can be fine for a Friday. You know, Friday does typically do Friday either reverses or it ranges, right? So think of it this way. Friday can do two R's. It can either reverse or it can range, right? US30, the most volatile index out of the three index sisters, did not provide us with any opportunities. But that now gives rise to Monday. Monday, we had a bearish start to the week, right? So this was, sorry, let's go back to Monday. So this here was, sorry, I've just called it Friday. Sorry, this was Monday. Monday's price action over here was very rangy, right? So Monday over here typically ranges, right? When it comes to the when it comes to the dollar pairs itself, right? We see the US30 over here. This is Monday, I beg your pardon. And Monday gives us a range in price, right? So this is important to understand. Monday gives us a range in price. This is important to understand because Tuesday is when the week starts to move in its direction, right? So Tuesday is when we see a very clear movement in direction, right? Now, Tuesday we had some news over here. We had some US news over here, US dollar red folder over here. But the thing which I want to draw to your attention, I want people to understand this, is that what we have over here is we have two previous day highs. We have the Monday high over here, and we have the Tuesday high over here, right? So this here represents Monday's high plus Tuesday's high. Okay, now when it comes to understanding CPI or generally high impact news, what we're typically looking for is we're looking for a sweep of liquidity before moving in the news's intended direction. So what do we mean by this? When you as a trader look at the markets, you want to understand it from a liquidity standpoint. So what we have over here is we have Monday plus Tuesday, right? The previous day highs, or PDH, right? Previous day highs over here. And notice how CPI over here. So CPI was this very large bearish candle over here. This here was CPI, very, very volatile news event, which we obviously don't want to trade. On Twitter, you'll see people trading, 10R, 20R, 30R, right? You want to avoid CPI at all costs, right? Because you're a trader, not a gambler, right? So you want to avoid CPI at all costs. But what we need to understand from a liquidity standpoint is that we've had Monday's high and Tuesday's high that gets swept just before the large news, the red folder news event, right? So this here is what I want to draw your attention towards. Okay, this concept over here. This is essentially how the markets work, right? Markets work from sweeping one liquidity pool to the next, right? So what you want to see is when the high of the week forms, it will typically form using some kind of a news event. The news event will be the catalyst for the high or low of the week, right? So this here is the high of the week, or very, very likely to be the high of the week over here, high of the week over here. And this now represents that weekly cycle where we have Monday that generates liquidity, right? In this case, we've had Tuesday that's also generated liquidity, right? And now going into Wednesday, we've seen Wednesday sweep liquidity before heading downwards, okay? So from here, we have three sections to consider. We have Monday, which I'm going to label in red, right? We want to avoid Monday. We have Tuesday, which I'm going to represent here in orange. And here we have Wednesday, which I'm going to represent in yellow. So this here is similar to the accumulation, manipulation, and distribution. So we understand we have Monday that forms an accumulation, right? We have Tuesday that forms a manipulation, enticing those early buyers and sellers. So we have a manipulation. And Wednesday finishes the manipulation and does the distribution, right? So the distribution typically is in a line with red folder news events, right? And this is what we see over here in the markets, right? We see CPI giving us the high of the week notice how we swept the Monday and Tuesday previous highs, which is very, very important to understand, right? So now we see a sweep of we see a sweep of not only the Asian highs, but we see a sweep of the previous day highs as well. Notice how Asian liquidity is being swept simultaneously to the overall previous day high sweeping. Now from here, if we look at most recent price action over here, sorry for that, we had Thursday. So we had Wednesday that gave us a quite quiet New York session. Now, because we had such a large movement to the downside, we had a very large movement over here. After that, you can expect a typically low volume New York session, right? When the markets do open, right? We have seen quite a rangy day on Wednesday. That can be normal because we've had the bulk of the move coming on CPI. And so from here going into Thursday's price action, right? Again, we're looking at liquidity more than anything else. We're looking at liquidity more than anything else, right? So we understand we have Wednesday's previous day low, right? Wednesday's previous day low over here, right? So this is Wednesday PDL or previous day low. Very, very important to understand, okay? So going into Thursday, notice how Thursday was a bullish day, right? Thursday was a bullish day. So you now have to ask yourself, if we see a bullish day, we're going to go down to go up. The markets move down to go up. So where is the liquidity pool in this case? Where is the drawn liquidity to give us a bullish day? Now the answer here is we have a Judah swing over here. So this is now our Judah swing. But notice how this Judah swing is in direct proportion to this previous day low. This is not a coincidence. This is not a coincidence at all. And the reason for that is because as we can sweep previous day highs in the market over here from CPI, we also can sweep previous day lows, right? Using the same concept of liquidity. So if there's one thing you take from this video, use previous day liquidity to inform your moves for the next day. And everything is from time of day and day of week, okay? This is important to understand. The final concept I want to go over is the concept of what we call SMT or smart money technique, right? Smart money divergence. What do we mean by that? So here we have the US30, and I'm going to draw a line like this from Wednesday's low to Thursday's low. So we have a downward sloping, sort of, you can call it a trend line, but we have a downward sloping price action movement over here. And this is the US30 over here. This is the US30 chart, okay? If we now quickly flick to the NASDAQ, we're going to see something quite the opposite. NASDAQ gave us the opposite. This is what we mean by an SMT. So I have people talking to me about the SMT, and this is an SMT over here. This here represents an SMT divergence, right? SMT divergence, all right? What it means is it's simply a mismatch between two of the sisters or three of the sisters in the triad pair, right? So we have the three sisters, as we know. We have the S&P 500, we have the NASDAQ or NAS100, and we have the US30. So we're seeing a displacement between these three, and this is exactly what we see. This is exactly what we see between the NASDAQ and the US30, right? So we see the US30 sloping downwards, and we see the NASDAQ sloping upwards, right? So this is another extra confluence you can also use. But remember, the key takeaway from this is the concept of liquidity, right? So we have previous day highs that get swept, and previous day lows that also get swept.